Markets in Asia were mixed ahead of key U.S. jobs data. Japan's Nikkei edging 0.1% lower after data showed the household spending figures in April were up 0.5% year-on-year, the first increase since February last year. Hong Kong's Hang Seng Index down 0.6%. The Shanghai Composite flat after China trade data showed that exports in May rose faster than expected at 7.6%, while imports were weaker than market forecasts. Looking at U.S. markets, they ended weaker last night as traders await again that U.S. monthly jobs data. The S&P 500 and the Nasdaq retreating from record highs reached in the previous session. The Dow was slightly higher. Investors await the U.S. non-farm payrolls report, which will give an indication of labor market easing. S&P losing 1.1 points, the Nasdaq losing 17.2 points, and the Dow Jones rising about 76 points. Taking a look at the local markets, the all-share index falling 0.2%. The rand firmer at 18.89 to the US dollar, 24 rand 18 to the pound, and 20 rand 58 to the euro. Looking at commodities, gold trading at $2,334 an ounce, platinum $988 an ounce, and a barrel of Brent crude is $80.12. We're now going to be looking at market dynamics, and we'll have that conversation with Patrick Matidi from Aluwani Capital. Patrick, thank you so much for your time this afternoon. I mean, with talks around a government of national unity, how's our local markets and the currency reacting to those news?
Yeah, I think we haven't seen much in the form of decisive outcomes on the political front. I think the ruling party has proposed a GNU, as you call it. The other parties still need a bit of time to reflect on that and come back, with their own views as to how they see that working. So far, the currency a little bit weaker. It has been the last couple of days, especially after the election outcome, dragged largely by, again, the politics, but also if you look at what happened yesterday with the rate cut from the ECB, we did see the euro strengthening, which then meant that on the crosses, the rand and other major market currencies also struggled. So the markets playing a wait-and-see game, and hopefully by Monday there should be better clarity as and when the politicians are able to find themselves and form a government going forward.
I'm glad you brought up the ECB, because we kicked off with the Bank of Canada being the first G7 country to trim policy rates, and then followed by the ECB. If you had to look at, some of the expectations for the Fed, and we had to bring it down locally to the South African Reserve Bank, what kind of data would the Reserve Bank need to see, or perhaps even a move from the Fed, in order for the path for a rate cut locally to be set out, so to speak?
Yeah, I think starting off with the Fed, the fall has been fixated with the jobs part of the economic data. I think inflation from a CPI point of view, that has been trending lower, but the jobs market in the US has been very, very sticky, as evidenced by the pretty tight labor market and very high unit labor costs. So to the extent that that starts to trend down decisively, I think that will give the Fed a good signal, to then start to cut. On the domestic front, unfortunately, it is the entire CPI basket where you are looking at your main components, food inflation, energy prices, and the likes. Those remain again on the downward trend, but still fairly sticky. And I think for our MPC, over and above just the pure fundamentals as in the inflation basket, certainly the political outcome will have some bearing in terms of the influence on policy going forward. And if there is any such changes in policy, the extent to which that can have an impact on inflationary pressures, especially if the rand weakens as a result of the political outcome, that can strain the MPC in terms of their outlook on inflation.
Let's talk company results for a bit. We had the Foschini Group releasing their numbers. Looking at the screen, that share price up 8.9%. What was the key takeaway for you when you look at those numbers?
Yeah, so Foschini's results came in a lot better than expected, on all fronts. So top line revenue growth up about 9%, profitability also very strong, with a decent cost management. Cash conversion also very, very attractive, to the extent that they managed to surprise shareholders and reward them with a 33% increase in dividends. So I think overall it's a good story, a good package. And operationally, I think the key star performer is the online offering. where they continue to gain a lot of traction. And that comes obviously with the less store rollouts and therefore less capital in the form of setting up stores. So overall, I think it's a great story. It gives a sense of what's happening in the SA Inc. space, but also their offshore businesses also are turning around quite nicely, and that is largely in the UK.
I'm curious about your thinking when it comes to the commodity market. I mean, if you wanted to have exposure as the head of equities at Aluwani Capital, I mean, what kind of exposure would you want? Would it be precious metals, base metals? How would you want to be positioned if you did like commodities?
Yeah, so our preference is to be in the diversified commodities, so companies that have a little bit of everything, largely because commodities as a single commodity stock, they tend to be very, very volatile. If you look at the last couple of days, the last 5 days or so, the JSE has been up and down, and the swap between the stocks that are up and down has been around commodities, where the price, have been very, very volatile, despite underlying commodity prices being fairly steady.
Yeah.
So for us, the preference is your likes of your Anglo-American,
right.
Your BHPs, because you do get exposure to a whole basket of commodities. So you're not caught in this volatility that we're seeing currently.
All right, Patrick, unfortunately, we have run out of time. Looking forward to catching up with you again. That is Patrick Matidi, who is the head of equities, at Aluwani Capital. We're going to take a quick break. When we come back, we'll have SME on point. Stay tuned.